Good morning, students. I extend my heartiest welcome to you all to today's session that is based on financial accounting. I am Dr. Nitin Kumar Agarwal, Associate Professor, Timid College. So today's topic is what is bank reconciliation, right? So we have to discuss about the bank reconciliation and exactly what kind of this statement is and why we are going to prepare it and what is the need, what are the objective, exactly what the particular significance of this statement is there. So bank reconciliation is the topic for the day, and I think that when you are studying this topic, you will benefit and you would be able after this study that you can prepare your financial document in the form of bank reconciliation. So let's start with this topic that bank reconciliation statement is a financial document. It is reconciling the balance of passbook as well as cash book. It it is clear right now that you have to observe two books: the passbook, which is provided by the bank to you with the bank information. So whatever the transactions are you are maintaining with the bank, so definitely these this is the particular statement, this is the book which is providing the information regarding your bank transactions, and you have to maintain the cash book, right? So in the within your organization you are maintaining the cash book, and sometimes what happens that if you are making some transactions with the bank and you find that everything is mentioned in the passbook, and you are already maintaining your daybook or your cash book. So what happens that there is a discrepancy, there is a difference between both the books, so you have to find the discrepancies. So in order to find the discrepancies, in order to find those errors which were left or any fraud, right? So you need this bank reconciliation statement with you. So on a periodically you can prepare it, and on a specific date you have to find that exactly what is the balance with cash book and what is the cash book. We are talking about the bank column of the cash book. Okay, as you are aware, I think that you are aware of the cash book with the bank column. So you are maintaining your cash book, you are maintaining your bank passbook, or which is provided by the bank itself. So you can go through the passbook and you can go through the cash book, and you find that there are some discrepancies in the balances, right? So if there is a difference, so it means any particular transaction is not recorded either in a passbook or in cash book. So you have to identify, you have to explain the differences, and with the help of the bank reconciliation statement you can go to find these differences. Okay, so this is the particular need. You can say that you need to prepare the bank reconciliation statement. As we know that when it comes to prepare, when it comes to make your books of accounting, so we need, as a user of accounting, we want that everything should be very clear, there should be transparency, and in order to give the accuracy to your financial statement, every transaction should be observed, and every transaction which is having a meaningful information, right, should be written in the books of accounting. So bank reconciliation statement is that particular document which is helping you, which is assisting you in providing the accuracy to your recording to your accounts, right? So this is the particular importance, and as per the particular need, if we talk, we focus on this topic, you find that accuracy is required in the books of accounting. So it ensures the accuracy of both the banks and company records, because you are matching with your with the bank passbook and your cash book. Okay, and when it comes to find the errors, it means you have to detect the errors. So identifies the errors in either bank statement or company's cash book. So maybe some errors are taking place in passbook, because if you are making the transaction with the bank and bank is not recording that transaction, okay, so by mistake if any particular transaction was not recorded from the side of bank, so you find that there is a gap in the passbook balance. Okay, but you are maintaining your cash book already, so you think that you have already recorded that particular transaction in cash book, but it is missing in the passbook. So that's why we are calling that error detection is must, and for that purpose you are preparing the bank reconciliation statement. Okay, and fraud prevention, in order to find the particular fraud and to prevent, it is must that you prepare bank reconciliation statement periodically. And there is another need of this particular document, that when you are going to manage your cash flow. So it assists in managing cash flow very effectively. Okay, it provides the accurate picture of the available funds. So if you want to know that exactly what is the cash position, and so because you are going through the cash book, right, and you are also checking that what is the balance in the passbook. So this is the particular match, and you can manage your fund easily. Okay, and when it comes to compliance, it helps in maintaining accurate records for regulatory compliance and audit. As you know that accounting books are audited by the auditor. So that time, in order to comply with all the regulatory requirement, you need this reconciliation statement, because as you know that when we are maintaining the books of accounting, the entries or the transactions are recorded in those books as per the voucher system. Okay, so if you think that if you are having the vouchers in your hand, so it is very very convenient for you that you can go through the passbook and cash book, and you can tally that a particular transaction which is very very important to write in the cash book, and but there is a particular mistake in the passbook. The bank is not maintaining that record in that particular passbook, or is not providing the detail of that transaction. So through vouchers you can, because you are having the evidence. Yes, so this is the compliance. So you have to know that exactly what is the need. So accuracy, error detection, fraud prevention, cash flow management, and compliance. If you have the sense of these particular points, so definitely you can prove that this is the need of the bank reconciliation statement in the books of accounting. Okay, so and what are the objectives? So I think now you are familiar with the bank reconciliation statement, and it identify the discrepancies. So to identify and explain the discrepancies. Why? Because the this particular statement is also describing, is also disclosing the causes why there is a discrepancy, why there is a mismatch of the balances of bank column of cash book and passbook, right? And in order to verify the transaction, this particular statement is also required, because you are verifying. Suppose for example, if you are depositing cash into bank, right, and you have maintained that record in the cash book, but passbook is not giving you any evidence that this type of the transaction took place. So in order to verify the transaction in both the books, you require this particular statement in the name of the bank reconciliation statement. Okay, so if you want to update records, because what happens that if you are not going to match with your passbook balance with the cash book balance, so what happens that there is a mismatch, and if you want to update the records, that particular transaction was made, or particular transaction was between organization and bank. So if you think that anything was left to be recorded in your cash book, so that time you can update your records with the help of this statement. So to ensure the accuracy, to prevent fraud, again these are the objectives of the this particular statement. Okay. And what about the importance? As I told you that now you are having the sense of objectives and needs. So I think easily you can describe the importance of this financial statement, financial document, that is financial control. It means it enhances financial control by ensuring that the cash book and bank statements are consistent. Okay. And it improves the accuracy, reduce the risk of errors in the financial statement, because once you are ready with your trial balance and you are going to prepare your financial statement, and sometimes if the errors are left in the ledger posting, okay, or there is a particular gap, already you have made the transaction with the bank, and that is recorded in the passbook, but because you did not enter that particular record in cash book, and on the basis of the cash book, if you are maintaining the ledger, and after that trial balance, thereby you are preparing your financial statement, so there would be a particular gap, because there is a omission, error of omission, because you left a particular record, right, and it was having the meaning, and it is very very important to write that record in the books of accounting, because sometimes we think that a particular transaction which is not having the meaning for the user of accounting, okay, leave it, but it is told that everything which is of meaningful information and which can affect the decisions of the user of accounting, it should be recorded, right, in the books of accounting. So as per the principles of bookkeeping, we should record everything which is very very important in the business organization and which can affect the decisions of the user of accounting. So in order to control these transactions, in order to maintain, in order to enhance the financial efficiency, right, or for the better cash management, fraud detection, and decision making, regulatory compliance. And when it comes to audit preparation, because I told you that on the basis of voucher system you can verify every transaction. So there is a need of this financial document. So these points no doubt describes the importance or the significance of the bank reconciliation statement, right? So now you are aware that why we are preparing it, what is the meaning of the bank reconciliation statement, and what are the objectives, what is the need, and why there is a significance of preparation of this particular statement. Okay, so I think it is enough for knowing, and you have the if you are having the interest. So in order to ignite your interest, in order to ignite your interest to prepare the financial statement, I am just describing the importance. Okay, once you are ready with the significance that yes, this statement is very very important, when you while you are preparing or you want to find the errors in the accounting books, or if you want to give the accuracy, if you want to control over your financial activities, and you want to fraud that is supposed to take the place in your organization, and if you want to comply with the regulatory bodies, and if some decisions are to be made over there. So everything is related to, everything is leading to the importance of the bank reconciliation statement, right? And now it is also very important to know about the steps in preparation, right? How will you prepare the bank reconciliation statement? So step one by one we would focus on it. That the very first thing is that compare entries, right? Because the transactions are given you in the question. Okay, or you can say that some transactions you have to observe and you have to compare with the bank statement, and compare with the bank statement with the company's cash book, because two books are there, right? At the earlier stage we from very earlier stage we are talking about the passbook and cash book. So cash book is maintained by the organization itself, okay, or the accountant who is responsible to prepare the cash book, right? He is maintaining. But the passbook is, or the bank statement is given by the bank, right, for your accounting information, whatever the transactions are taking place between both the parties. So if you are not having the bank statement, you can never know that exactly the particular transaction was recorded by the bank or not. So you have to compare bank statement with the cash book. Okay, so identify discrepancies, no doubt, in order to identify the reason, because if some discrepancies are found in any book, definitely you would like to know that what is the cause, what is the reason behind it. So in order to find, in order to locate those reasons for the discrepancies, such as outstanding checks, deposit in transit, bank errors, or errors in cash book. Okay, so for example, suppose you are sending any check, you are depositing the check into bank, and you send a person to the bank for depositing the check or cash, right? But in transit, what happens, that check was lost or the cash was lost, and that person is not telling you that he could not deposit the cash or check into bank. So what would happen over there? What would be the effect? No doubt, if you think that you have sent a person to bank for depositing the cash or check, but there is no entry because the person could not approach to bank, right? And the check or the cash was not deposited, and such in the way that there is no increase in the fund bank balance, right? We are talking about, and when you thought that you are sending a person for this transaction, no doubt you entered this transaction in the cash book. So you find that there is a particular transaction which is recorded in a particular book, that is cash book, but not in the passbook. So what would be the effect? The effect would be a particular the balance is not matched, right? So you have to identify this discrepancy by matching both the balances of the books, and you that is possible through bank reconciliation statement. So you have to identify the discrepancy. This is the second step. And now you have to adjust the cash book. Yes, it is to be kept in mind when you are preparing the bank reconciliation statement. right? And you have already compared that what is the balance of passbook and cash book, and already you have identified the discrepancies, the reasons, right, in the form of the transactions. Now you have to adjust the cash book, because it is permitted that you can change, you can make the some correction or adjustment in the cash book, right? But you cannot touch the passbook. Okay, you are not permitted to change any balance in the passbook or any entry. So it is must to know that you have to adjust the cash book right now, and prepare the statement. After that, you have to prepare the bank reconciliation statement to show adjusted cash book balance and bank statement balance, right? And it would be explaining the reasons for the differences. Okay, so these are the steps to be kept in mind when while you are preparing the bank reconciliation statement. And this is the time to know that how to solve a numerical question, because it is must to know practically how it is solved, how the entries are or the transactions are identified, and how will you prepare this bank reconciliation statement with the help of those reasons, those causes which are given you in the question. So just approach to the Excel sheet, and where we would solve this particular numerical. Okay, so this is the basic format for preparation of the bank reconciliation statement. The first column is particulars, and then plus items and minus items. So yes, now let us go to the question. So question is with these statements. The first statement is that debit balance as per bank column of the cash book. Okay, so debit balance as per bank column of cash book. It means you have to write this. This is the balance in the plus side. Okay, so debit balance as per cash book. And I think there is no need to repeat it, that we have to observe, we have to go through the bank column of the cash book, not the cash column, because if you are maintaining 3 column cash book, right, with the bank column, so you have to approach to that bank column. So you have to find exactly what is the balance of bank column in the cash book, and you find there is a debit balance, and you have to write it here, 372,000. Okay, and the second transaction, if you go through, you find that checks issued to creditors but not yet presented to bank for payment, right? So this is again the case where you are making a transaction with bank. You issued the checks to creditors, okay, the parties where you are, maybe you have bought the goods from, and or you have taken some payments. So if you are issuing the checks to your creditors, right? So what happens when you are issuing the checks to creditors? The creditor will approach to the bank for withdrawing the cash. Okay, so payment would be made over there. So bank balance would be reduced over there, but not yet presented to bank for payment. So at the time of transaction, right? At the time of making the transaction, you thought that if you are issuing the checks to creditors, the bank balance would be reduced. So already that time you will reduce the cash balance or the bank column of the cash book. Okay, but what was the situation? The situation was that those checks which were issued by you were not presented to the bank for payment. It means there was no effect, there is no change in the passbook balance, there is no change in your bank balance. Okay, so bank balance is not decreased by this particular transaction, and because you entered this transaction in the cash book, you decrease the balance of cash book, so there is a mismatch between both the book. So bank balance is higher than the cash book or less? No doubt bank balance is higher than cash book, because you reduce the balance in the cash book but not in the passbook. So this is the particular entry, that checks issued were not presented for the payment. Okay, and what is the amount, and where you have to write in plus item or minus item, because I told you that you issued the check but not presented, bank balance is not changed, but you have reduced the cash balance. Okay, so opposite book is the bank check passbook, right? So you have to focus on the opposite book, because you are maintaining your cash book. In the very first line we mentioned that debit balance as per cash book. So cash book balance is given to you, so you have to think the opposite book, that is the passbook, right? And what is the impact in that particular book of this transaction, and you observe that there is no any change, there is no decrease, increase, but cash book was reduced, the balance was reduced by this particular transaction. So if you match both the books, you find that opposite book is having the balance more, right, or is having more fund. So 72,000 balance is there, right? So you have to adjust your particular cash book, you have to prepare this statement. And the next one is that dividend received by bank but not entered in the cash book. This is the case of income. You receive the dividend but on through bank. Okay, so bank is receiving the dividend and crediting your account. So bank balance is higher than your cash book because of not entering this transaction in the cash book. As mentioned in the particular question, you see in the transaction number third that dividend received by bank but not entered in the cash book. So the bank balance is increased, right? But you don't enter this transaction in cash book. Cash book is having less balance, right, in comparison of passbook. So dividend, you have to mention dividend received by the bank not entered in the cash book. So bank balance is higher than the cash, so you have to focus on opposite book. Opposite book balance is higher than your cash book, right? So 5,000 you have to write in the plus items. And the next item, that is the fourth item, is interest allowed by bank. Again, the income. It means the bank balance is increased by this transaction, so you have to write interest allowed by the bank. So again, this is the same case that you are receiving the income through bank and bank is crediting your account, but as you were not informed or you are not aware the particular income you have in your bank balance or bank account. So what happens that cash book is not changed over there. The bank column in the cash book is not changing any amount by this transaction. So if you compare with the passbook, your cash book, you will find this discrepancy due to this particular transaction, that is interest allowed by bank. So you have to write that this is also the plus item. 1250 is your income deposited in the bank by the bank account by the bank, and your passbook balance is increased as compared to your cash book. So you have to focus on your opposite book, that is no doubt passbook. So you have to add this particular item or you have to make it plus items. Okay, and the next transaction if we focus on is tax deposited into bank for collection. Okay, so exactly what is the meaning of the collection? First of all, you should be familiar with that, because terminology is very important to know that you are going to make the transactions recorded in the books of accounting. So if you are not aware of that, you cannot have the clear sense, and you cannot prepare the particular statement. Okay, so checks deposited into bank for collection. If you are depositing some checks into bank, it means for the purpose of those checks to be cleared, right, or for collection you are depositing in the bank. So in this transaction you observe that checks deposited into bank for collection means the bank on behalf of you will collect the money of those checks which were deposited by you in bank, and your bank account would be credited over there. But exactly what happened, there was a case that these checks could not be collected and the bank did not make your passbook balance or your bank account credited, right? So this is the case where you think that you deposited the check for collection and you are writing or you are entering this transaction in the cash book, right? And you are adding particularly amount of cash book is increased by this transaction, but there is no change. The particular balance of passbook remains same. There is no effect on the bank account. So if you compare this transaction right? If you compare through this transaction your both the books, passbook and cash book, you find that the checks were not collected, the bank balance is less than the cash book balance. Okay, so what is the amount? 15,400. It means you have to write in the minus items. Okay, and you have to write this entry that checks deposited into bank for collection, or you can write that check sent bank for collection but not collected. So you have to focus on the particular transaction, which is what are the type of those transactions, and on the basis you have to take the decision. You have to observe that what is the impact on the opposite book, and how will you identify, how will you determine that what is the opposite book, and you have to focus on the basis of the very first line, that is the balance of a particular book is given to you, and you have to prepare accordingly your bank reconciliation statement on the basis of that particular book, right? And you have to assume that you are maintaining a particular book, and you have to go through the opposite book, that is the passbook in this question. So on the basis of the effect on passbook, you have to maintain, you have to prepare this financial document, right? That is bank reconciliation statement, and 15,400 is the amount of this transaction. So checks deposited into bank, I am just repeating, checks deposited into bank for collection. So at the time of occurring these transactions, you are recording in cash book that the check were deposited for collection. So bank balance is to be increased. So you are increasing your cash book balance, but there is no effect. So bank balance is less. You have to go through this transaction, and you have to write this transaction in the minus item, that is 15,400. Okay, and what about the bank charges? Okay, next transaction is bank charges. As you know that if bank is charging some commissions or bank charges are there, so no doubt the bank will debit your account, and in that case bank balance would be reduced. But you are not aware, you are not informed by the bank, so you are not making any change in your cash book. So if you compare, you find that there is a discrepancy due to this particular transaction, that is bank charges rupees 200. So you have to write down that bank charges. Okay, and because the bank balance is reduced by this transaction rupees 200, you have to mention, right? Next transaction is that a check deposited into bank was dishonored, right? So now you have to develop a sense, you have to develop the understanding what is the dishonor of the check. So dishonor, it means, suppose you have received a check from a person, you deposit it into bank, but when the bank approached to that person for collection of that particular amount of check, so that was the case that party is denying, is not making the payment, so it is assumed that the check was dishonored. Okay, or due to any reason the check can take place in the form of the dishonor. So if bank definitely will disclose the cause by writing on the check that due to this particular reason this check is dishonored and the bank balance was not changed. So you think that check deposited bank, definitely the payment would be made by the party, and bank will credit to with that amount which is written in the check, right? But there was a case of the dishonor of the check, and you are not intimated or you are not having any information. So this is the case where you find that after depositing a check, it was dishonored. So bank balance is less than the cash balance. Okay, so you have to write, you have to mention this particular transaction here, that is a check deposited into bank was dishonored, right? Sufficient, and you have to write this particular amount here because check is dishonored. So this is 320. And the next transaction is bank paid house tax on our behalf. Sometimes what happens that you ordered the bank that if some expenses are taking place on behalf of the organization or your itself the bank will make the payment, right? But in this case, you see that the bank paid house tax on your our behalf, because already we have intimated to bank whenever any information uh, for this house tax is coming to you, you have to make the payment, right? But no information received from bank in this connection, so you are not receiving the information for this transaction, but exactly this expenses took place, and bank has debited rupees 400 in your bank account. Okay, on behalf of the house tax. Okay, you have instructed to bank, right? So what is the particular transaction? Bank paid house tax, but no transaction was recorded in cash. So you see rupees 400 which was paid as a house tax on our behalf by the bank, right? So bank balance was reduced over there, but as you are not having any information regarding this transaction from bank, so in this connection 400 the balance is less in the bank, so you have to write in the minus items. Okay, so there are 8 transactions in this question, right? And we should count it that 1, 2, 3, 4, 5, 6, 7, 8. All transactions have been made, right? You have to go through all the transactions, and now you have to take the total of it. The plus item, you find this is the total, right? And the minus item totals is this one, and the balance, okay, the balance of opposite book is the passbook. The balance of passbook, right, you have to find that what is that. So this is, we just apply the formula in Excel because we are having the facility right now, otherwise manually you can solve it. This is the amount and minus this one, and you find this particular amount, right? You have to check it whether it is correct or not, right? You can use the calculator, right? And we find that 450250, it is the plus items, and the minus item is 16320. So you find that 4,33,930, right? So this is the balance of passbook. You verified. So you have to make 2 times your calculation, right? So this is the particular case where you can prepare your bank reconciliation statement with the help of the items given you in the questions, or these are the discrepancies. One by one you have to observe on it that exactly what is the impact on the opposite book. So through this particular practical problem, you can prepare your this financial document, that is the bank reconciliation statement. But exactly how to solve it, I think now you are aware of it. So very first thing is that you should focus on the very first line, that exactly what balance or which balance is given to you as per the cash book or passbook. You have to write in the plus or minus. If the overdraft is given to you, you have to mention in the minus item. If the balance is given to you, you have to write in the plus item. But as in this case you see that debit balance is given to you, so you have to write in the plus item. But if the credit balance of the cash book is given to you, you have to write in the minus item. Okay, and after that the transaction, okay, as you will go through, you will find that what is the impact on opposite book. If you are maintaining your cash book, you have to assume the opposite book is your passbook. So on the basis of the effect on passbook, you have to change, you have to write a particular plus or minus item. So basically what we are doing, we are matching the two books, that is passbook which is provided by the bank, and the second is the cash book which is maintained by the organization itself, or you are maintaining your book. So if there is a discrepancy and what particular amount is making the difference, you find as per the transaction, and you have to record in the bank reconciliation statement. So I think it is sufficient for you to develop the understanding of the bank reconciliation statement, right? And we solve another practical problem so that you have more knowledge, you have more practice. So we let's come to the next question, that is your bank reconciliation statement on the basis of these transactions. So in this particular practical problem, you see that credit balance as per passbook is rupees 20,000, right? So you have to focus that credit balance of passbook is given to you. Okay, so you have to write down here credit balance of passbook, right? So you have to write in the side. Okay, why we are writing in the plus side? Because if the credit balance of cash book is given to you, that is the minus item, but credit balance of passbook is given to you, that is the plus item, right? Opposite book is given to you, and the second transaction you see checks of rupees 5,000 deposited into bank, but check of rupees 3,500 have been credited in the passbook. Okay, so now the opposite book you have to suppose that is cash book. So you have to observe the impact or effect of particular transaction on the cash book, right? So if you deposited check, so no doubt once the businessman is depositing the checks or cash into bank, right? So the entry is passed in the cash book, and the bank column of cash book would be increased by that transaction. Okay, so 5,000 were deposited in the cash book. It is it is supposed, but check of rupees 3,500 have been credited in passbook. It means this is the mistake, or you can say this is the mistake on the part of bank. Bank is not entering on the all checks in the bank, but due to any reason, maybe there is not a mistake, or deliberately the bank is not crediting due to any particular reason. So if there is a discrepancy, there is a difference between the amount, you find that 1,500 check were not credited in the passbook. So there is a difference. It means the particular 5,000 checks were entered in cash book, but in the passbook only 3,500 rupees, worth rupees 3,500 rupees were deposited or were recorded, right? So what is the difference? Difference is 1,500, right? So you have to mention this particular entry or transaction, that checks, right, of rupees 5,000, check of rupees 5,000 deposited into bank, but only only checks for rupees 3,500 were credited, right? So this is the particular transaction. So in the opposite book, that is the cash book, right? So this is the transaction that 3,500 credited in the passbook, but you assume, or the organization assume, that 5,000 rupees should be there in bank. Okay, so there is a particular balance with the cash book rupees 5,000, but in the passbook you find 1,500, right? So you have to go in the plus item because of this difference, right? And third one is that checks amounting to rupees 4,000 were issued, of which checks of 2,000 were presented for payment. So what is the transaction? First of all, we should focus on it. The checks amounting to rupees 4,000 were issued. Okay, so organization issued the checks. It means there is a less balance there. The balance of the cash book is reduced by this transaction, rupees 4,000. But you find this information as per this particular transaction, that 2,000 were presented for payment and it was not informed, right? or it is assumed that the organization is not having any information or any intimation regarding this transaction. So exactly what is the particular effect? The effect is that 4,000 checks, rupees 4,000 checks were issued. Okay, so the day book balance is reduced by 4,000, where the passbook balance is reduced by 2,000. So 2,000 rupees in the plus item you have to mention, right? And what is the particular transaction? Checks amounting to rupees 4,000 issued, but only checks for rupees 2,000 were presented for payment, right? So this is the case where you have to mention in the plus item rupees 2,000. And the fourth transaction is a wrong debit. Okay, a wrong debit of rupees 250 appears in passbook. And what about the debit balance of passbook? Why, if anything or any amount is debited in passbook, right? So it means the bank balance is reduced or increased. Yes, reduced, no doubt. So bank balance, the passbook balance is reduced by this amount, and it was wrongly entered because it is mentioned as per the transaction. So bank balance is less in comparison of cash book. Okay, so because the wrong entry was made in the passbook debit balance, so cash balance is increased, right? So we have to mention in the increased column of plus items, right? We have to include this rupees 250, and right, a wrong debit of rupees 250, right, was entered or appears, okay, as per the statement in the past. And the next item is bank charges of rupees 100 are debited in passbook. Again, this is the case of the debit balance in passbook, right? You are maintaining the passbook, opposite book is the cash book, and could not enter in the cash book, right? So bank charges rupees 100 were entered in passbook but not entered in cash book, right? So this is the transaction. And what is the amount? 100. So 100 rupees is plus, right? A customer directly deposited rupees 5,000 into bank. A customer directly deposited rupees 5,000 into bank. So what is the impact of this transaction? The bank balance was increased, but there is no information. This information with the organization, right? So there is a less balance. So we have to write an amount was directly deposited by customer into bank. This is the case where you have to write in the minus item rupees 5,000 and insurance premium rupees 500 debited in passbook. Okay, so again this is the case of debit, right? Debit entry in passbook. So the passbook debit balance means your account is reduced over there, right? And you have to think the particular balance you have to compare with the cash book, right? So insurance premium was paid by the bank but not entered in cash book, right? So you have to make it plus rupees 500. So this is the case that insurance premium was debited in the passbook, right? So once again, we go through this particular question so that you have more understanding. So very first thing is that in the first line you have to observe that the cash balance or overdraft or as per the passbook balance, the balance is given to you. So in this question you find that credit balance as per passbook is given to you, and you see that as per the, as I told you, that debit balance of cash is always plus and credit balance is minus, but here is the credit balance of passbook is given to you, so you have to include in the plus item, that is rupees 20,000, right? And checks of rupees 5,000 deposit into bank. Yes, you have to keep in your mind that the opposite book is passbook, okay? So cash book, and in this case, because the passbook balance is given to you, so we have to observe this transaction, and we have to have the particular sense that where is the impact, right? What is the impact on your cash book because of the opposite book. So checks of rupees 5,000 deposit into bank, right? So check 5,000 is the plus item in cash book, but there is only balance or the checks only for rupees 3,500 have been created. So cash book is having the balance more in comparison to passbook, right? 1,500 amount is the balance or is the difference, so you have to mention it. And checks amounting to rupees 4,000 were issued. It means the particular balance of cash book is reduced by 4,000, where only the check were presented for payment. Okay. Exactly what happened, that 4,000 checks were issued, rupees 4,000. Okay. So you think, right, from the perspective of the cash book, that the bank balance would be reduced by 4,000, and on that basis you reduce the cash book balance by rupees 4,000, right? But only 2,000 were presented. So bank balance is more than 2,000, right? Is having more balance. So we have to see that 2,000 is less in the cash book, right? Because you issued 4,000 rupees. Okay, so again, yes, this is the particular case where you are issuing 4,000 checks. Okay, just focus on it. 4,000 rupees, 4,000 were issued. Okay, and 2,000 were presented. So the cash book balance is reduced by 4,000, and the passbook, right? Passbook balance is reduced by 2,000. So 2,000 is the minus item. Okay, there was a particular mistake, you have to correct it. So this is the particular benefit if you go through question again once. Maybe you are already with your solution, but you should check, you should verify as per the statements. So in this case you see that 4,000 rupees were the balance was reduced in the cash book due to the checks amounting rupees 4,000 issued to the parties, right? So you reduce that 4,000 rupees, but exactly what happened, only 2,000 were presented for payment. So bank balance is more, right, in comparison of cash book balance is less, right? So we have to go for making this transaction in the minus items. Okay, so okay, so we should check another transaction also. A wrong debit of 250 appears in the passbook, so bank balance is reduced and cash balance is no doubt increased in comparison if you compare with the passbook. So wrong debit of 250 appears in the passbook, so passbook balance is debited, right? Or you can say the cash book balance is more than the passbook, so you have to write in the plus item this 250. And bank charges of rupees 100 are debited in the passbook but not entered in the cash book. So again, this is the case where the bank is debiting your passbook, is reducing the balance, but there is more balance in the cash book because there is no impact, so you have to write it in the plus item. and customer directly deposited rupees 5,000 into bank. Okay, so there is a less balance in the cash book, so you have to write it in the minus item, right? And insurance premium of rupees 500 debited in the passbook. Again, there is expense, and this payment was made by the bank without informing you, without intimating the particular businessman. So this is the case where you find that insurance premium or the bank balance is reduced by this particular transaction, rupees 500, and but this transaction was not mentioned in the cash book, so cash book balance is the same as earlier, right? So there is a plus item, right? So now we have to take the total. So this is the total of this plus item, and when you take the total of this side, you find 7,000, and the balance as per cash book now you have, right? Okay, just calculate it, this one minus this one, and you find 15,350. This is the balance as per cash book. Okay, so I think now after trying these two numerical exercises, no doubt you are having the experience how to prepare the bank reconciliation statement very effectively. And this is my suggestion to you, that if you go for more exercises, more practical problems, no doubt you will have the capacity, you will have the ability to prepare the bank reconciliation statement very effectively. Okay, but you have to focus that only three things you have to keep in your mind: that which book balance is given to you, and what is the opposite book, and what is the impact on opposite book of any transaction which is given to you, because the reasons behind the discrepancies are given to you, would be given to you in the question. So you have to think the very first thing, that what balance is given to you, which book balance is given to you, and opposite book you have to determine. On the basis of the impact of any transaction on opposite book, you have to match. And if there is increased balance as per the opposite book, you have to mention in the plus item. And if opposite book is having balance less in comparison to your book, so you have to give this particular record in the minus item, and in such a way you can prepare your bank reconciliation statement. Okay, so today's session no doubt covered the topic of the bank reconciliation statement, and what is the importance is there of this particular financial document, and what are the objective, what is the need, what is the significance, already we covered in this session. So I think that you would be doing well when it comes to this topic, or solve the numerical of this particular topic, right? Thank you very much.